The chips trade and Stargate specifically is where we begin, because my next guest says it helps answer one very important question in the AI build-out. Will there be enough funds available to continue growing CapEx before the industry starts generating a return on all this investment? Stargate, he says, suggests the answer is yes. Let's bring in Wolfe Research's Caso. Chris, great to have you here. And listen, I think a lot of people seem pretty confident that there's going to be a payoff, or else I don't think they'd be plowing in hundreds of billions of dollars, right?
Yeah, that's exactly right. And, the point you're making is that if you go back a year ago, certainly 2 years ago, the numbers that we were looking at for NVIDIA specifically, the main question we got from investors is, where is this money coming from? Who's spending this money? And, it's one of the things the Stargate announcement, helps to answer is, well, here's one example of some folks that are willing to spend a lot of money, and particularly, ahead of the return on investment on AI, because that's been one of the other questions that investors have had is that, right now, some projects that have, high return on investment and some projects are, still waiting for that ROI. One of the things that this announcement is saying is, yes, companies, and particularly these companies here, are willing to invest ahead of the ROI because they feel the ROI over the next 5 or 10 years is going to be so high.
Yeah. Chris, if we could kind of back up for a second more broadly, you kind of get into the details of Stargate, and a lot of this was in the works already. This was a Microsoft OpenAI supercomputer partnership that was first reported back in March. So, yeah, maybe now there's 10 data centers, or there's going to be 20, and now you've got SoftBank involved and ARM, and that's all well and good. But why do you think the stocks are reacting the way that they are? Maybe ARMS is because of its kind of newer involvement, but does this reaction make sense to you, and is it sustainable?
Well, that some of these stocks had pulled back more recently. In the case of NVIDIA, there's been some questions about the transition of the new product ramp at Blackwell. How strong is that the first half versus the second half? And our view is, there's a transition period. We're expecting a much stronger second half. In the case of Micron, for example, which is one of our favorite names, they've been going through a cyclical downturn in, some of the core business, such as handsets and PCs. And, we feel once you get to the end of that, the stock starts to react as a reaction to what's going on in AI. So I think the quick answer to that question is that, some of these stocks have been under pressure for some short-term reasons. And, then, obviously people go back to, what the real prize is over the next few years.
Which, did you say that was Qualcomm? What are some of the names that you think could be the next movers in what's been a very hot space?
Yeah. So our favorite in the space right now is actually Micron, because it's been a body favorite. Because of the cyclical part of the business is still correcting because some of the inventory correction that's happened. But they have a very good place in AI. They do the HBM memory that goes into AI service. It's a new business for them. We think it's going to be a very good driver. We also like NVIDIA, which everybody likes right now, but we think they are the long-term winner. And we also like Marvell, which is, one of the companies doing the custom silicon for some of these companies. And there's some question about how much of the market is going to be merchant silicon for the broad market, like what NVIDIA does, and how much of it is going to be custom.
Yeah, no, and I think that Marvell is up big, but it's a much smaller market cap if they do, stand to benefit considerably. Chris, if you'll stand by, we've actually got a news alert on Qualcomm. Christina Partsinevelos with that story. Christina.
Well, we have all new global Samsung phone models will now exclusively use Qualcomm chips. This actually expands the partnership Qualcomm already has with Samsung, their largest Android customer. And this really marks a big shift in Samsung's strategy, because previously they used both Qualcomm chips and their own in-house processors. This is just last year they announced it. Now the new models will use only Qualcomm's latest Snapdragon 8 Elite processor, which will enable, on-device AI processing. Yes, to rival AI capabilities just added to Apple iPhones as well. And it's touted as what they're saying, the world's fastest mobile system on a chip. So you can run sophisticated models like Gemini directly on the phone. You don't necessarily need a connection to the cloud, although everybody uses a hybrid model at the moment. And this really comes at a time that Samsung has been looking to close the gap on global smartphone market share. IDC research pointing to Apple as the global market leader, with Samsung really right behind. There's even conflicting research saying Samsung is number one. So there's neck and neck. And more recent data suggesting Apple is slowly losing market share in China to local names like Huawei. And as Samsung's efforts to win over U.S. consumers from Apple ramps up, pre-orders actually open today with a release date of February 7th. So the biggest takeaway here is that all Samsung phones will be using, the new ones will be using Qualcomm chips, which shows that they're not using their own in-house ones.
Am I to understand also, Christina, that Samsung faces existing challenges with its chip development?
Well, more so with its foundry business, and you were just talking about high bandwidth memory. So Samsung is a provider. There was just a report coming from South Korea this morning that Samsung is looking to cut its capex spending specifically related to its foundry business. So when hearing a report like this with Qualcomm, it makes me think, who's going to benefit? If Samsung's foundry business isn't doing well, Samsung is not using their in-house chips, does that mean that TSMC will benefit given its partnership with Qualcomm? So there's a lot of players. They're all connected. But when we're talking about foundry business, the big ones are Samsung as well as TSMC.
All right, thank you. Qualcomm shares are taking a bit of a leg higher on this, up 2.5%. Christina, thanks. Christina Partsinevelos. Chris Caso of Wolfe is still with us. Chris, would you add anything to the significance of what you just heard?
Yeah, and it's something, luckily, I can speak about because we've spoken about it before. But if you go back in the last generation, about 2 years ago, Qualcomm did supply almost all of the chips for Samsung phones. Over the last year, in the last generation, the 24, their share dropped to about 75%. And the reason why the share is going higher is mainly a function of Samsung's own difficulty in getting their leading edge manufacturing, their foundry business on par with where TSMC is. So they've been struggling there. And then Qualcomm is the beneficiary because they pick up those sockets, and then Qualcomm does those chips at TSMC. So yeah, it is a driver. So, you know, their share of the 24 this year, the last year's phone was about 75%. And you know, it sounds like that's going higher.